10 years or so ago, we started spending some time thinking about residential in its widest possible guise. That very quickly took us to the UK student hall market, and I worked for a prior entity where we were one of the first to create a UK student hall product. And the vast majority of my time over the last 10 years has been spent on residential in one form or another. We've written 25 different research reports covering all manner of things. Today, Aberdeen Standard Investments runs in residential, in a core sense, about €6.5 billion. That covers all manner of parts of the residential market. And I also have a responsibility for a pan-European value-add strategy that is creating product that will be wholesale residential. That's what we're up to. And we do it listed, unlisted, debt as well.
Great. Rainer.
Good morning. My name is Rainer Nonnengässer. I'm CEO of International Campus since beginning of this year. International Campus is a developer operator in the student housing and micro-living sector. We are Germany-based, but currently cover Germany, and the Netherlands, Austria, Hungary, Czech Republic, and Poland. And we are about to build a pan-European platform in that sector. Since mid of last year, we belong to the Brookfield family, and currently we operate 2,500 units and have another 4,500 in delivery.
Great. Christian.
Yeah, good morning, everybody. My name is Christian Scheuerl. I'm Managing Director of MPC Microliving. We are a developer operator based in Hamburg, Germany, and in the last 5 years, we developed roughly 1,500 beds and 8 schemes all over Germany. We plan on doing so in the future, and as a developer and operator, it is our feeling that we offer something that, at least in the German market, quite a few investors are looking for. So you don't only need the development knowledge, but also knowledge how to operate, and with our brand Stay 2, we bring both to the table. And in the last years, we've been working with Patrizia and with Harrison Street as our investors, and I think we are on a good way to grow into a major position in Germany.
Great, thanks. Let's just start with you, Andy, if we can. Just because I'm interested to see, there's been a lot of discussion about student housing, micro-living, but also senior living, healthcare, and you've sort of launched a fund under that kind of broad living area. What are the sort of key drivers for that residential living space, and why is that being more attractive, do you think, at the moment to institutional investors?
So we launched a pan-European core residential fund about a year ago. That capital has been fully invested and do other things in due course. I think one of the challenges that people have is trying to classify parts of the residential market, and we purposely didn't. So as you say, I think we would rather think about living or residential, because there are clearly differences as you look across parts of the market. So in the UK, I think that it's much more defined what student hall looks like. But if you look at someone like Germany, then is it student halls or is it micro living? The boundaries aren't quite so defined. So it makes more sense to have a more fluid approach to core investment. So to the second part of your question, why is this happening? Why is there so much demand for core stabilized income streams? One of the papers that we wrote a few years ago, which is not like other people's, it's called How to Invest in Global Winning Cities, given that offices are typically overpriced, shortened to winning cities. It's not a classification of cities, it is a classification of how you should behave in the cities. The very obvious point, which it took us a long time to get to, was to say that fundamentally the European cities are about growth. It's about urbanization, it's about the pressure on undeveloped land, it's the need for lower cost housing of some form or other, and that intensity of demand isn't going away. And I think the research that was just shown is an illustration of the point. The volume of demand for various forms of residential against the possible supply is a fundamental that isn't going anywhere anytime soon. And if you put that in the context of institutional investors who are typically coming from an office market that may be disrupted by things like WeWork, or the retail market that is being disrupted by things like e-commerce, or the logistics market, which is also changing, perhaps more positively today, then the fundamentals of residential are frankly better.
Okay, good. Maybe just Rainer, we've seen some of the information there from Stefan, Samuel rather, that indicates quite a big change over the past 12 months in terms of the amount of capital coming in. What are you seeing? I suppose what are the big trend changes that you've seen or developments that you've seen over, let's say, the last 12 months?
The current landscape is pretty much characterized by still extremely low interest yields, extremely growing liquidity in various markets, and the scarcity of products to be invested. And we have seen in our sector a rising appetite for this asset class, not over the last 12, more last 48 months, due to the fact that it's a stable income producing product. It deserves higher yields than typical resi or comparable hospitality products. It goes along in most of the cases with lower risks as regards occupancy, quality of occupancy, and investors getting more and more mature also in assessing, let's say, the requirement and risks from the operational side of such schemes. So putting all these factors into perspective, we believe that this asset class deserves a brilliant product for a global investor who's looking into a diversification of its investment base compared to, let's say, 3-4 years ago, whereas only, let's say, specialized investors were primarily looking into that sector.
And do you think, Christian, are you seeing that as well? Do you think that then it's a sort of, there's an element of a defensive play about micro-living, about student housing, that sort of living sector?
Well, from our assessment, the really big institutional investors who have to deploy large amounts of equity per year, they're looking for an asset class where there is liquidity in the market and portfolios and larger deals can be traded. I think everybody who is active in transactions knows that if you transact a 20 million building versus a 200 million building, you have almost the same amount of work, but only a tenth of the money you set to work. So in the last years, the problem for many institutional investors was not that they didn't understand student housing, but that they said it's a bit too small, because I don't want to invest in only a 15 million building. Looking at the German market, the big deals where you really have like more than 300 units are quite rare, for once, because building regulations are quite strict in Germany, and such large buildings per se aren't so easily available. And if you look at Berlin, for example, the lots where you could build something like this are also not so available everywhere. So in the investment sphere, I think the asset class is just getting more and more attractive because people see that they really can invest significant amounts of money there. And given all the macro data that Samuel provided, I think there's no doubt that student housing is definitely not so affected by potential downturns in the economy because of the number of students that stay stable, and that potentially even in an economic downturn, people tend to go back to university to get an additional degree or something like that, because they say, okay, I can't find a job right now. What do? I invest into my personal education. But one thing, well, I'd say congratulations to Aberdeen. The investments and the funds we see in Germany, like the big institutionals in Germany, Union Investment, Commerzreal, Catella, they all have raised funds for student accommodation. And when we talk to the investment managers at these funds, we always learn that they really have problems to committing the equity they've raised for the fund into projects, because the real institutional grade product, at least in Germany, is quite rare. So I think in the next years we're going to see even more consolidation there, because the number of players that are able to deliver good quality and in time and budget, it's definitely limited. Many things you see are small developers, let's say, okay, I've been doing this for years in the condo segment, now I do student housing. It's not that easy, but many people tend to say it is.
Can I just react to it? I think one of the comments you've just made is very, very relevant, which is about the access to the investable stock. There is an undeniably strong fundamental here about a lack of wholesale product that is suitable for the future. So buying disaggregated or small portfolios of assets is a very different game to buying high quality, dependable income stream type assets. And the problem comes when you're then trying to deploy capital in specific markets. And through our own observation, it is very clear that there is something about having the appropriate scale of building, or within one entity, the number of units that you require, because the management efficiency is incredibly important here. And you may or may not have seen, I was quoting the FT this week, which sort of makes me worried that I'm left of Corbyn, which I'm not, which is to say that rent regulation and rent controls of some form can be very, very valuable here, because ultimately why we say that and why that matters, and is completely against where most people in the UK are, is from our experience in Germany. Because if you get the design of the building right, if you get the offer correct, and it's different to student perhaps, but your tenants will stay. Our tenants are staying between 6 and 12 years, sort of average 8-ish, something like that. And why that really matters, gets the point, Andy, is because the operational efficiency is demonstrably better. We lose much, much less of the income for the operational and management, and therefore it suits long-term investors. So what I'm saying is, if you're the long-term investor, you want to be forward funding the correct product if this product does not yet exist. And we've been fortunate with our clients that they're prepared to do that, to go out into the market and hope that you're going to be able to buy some standing high quality product that exists today. It's very different in different markets. Hopefully some of that made sense.
Yeah, no, that's good, and I'll drill down a little bit more into that in a minute. I've had a couple of questions come in on the UK, which I'll start with you, Andy, and then Samuel, if there's things that you want to pick up from the research that you've got. This one's focused on rental growth. Do you think there'll be better rental growth in UK regional PBSA or London going forward? Is London now a saturated market?
Well, no, it isn't saturated. It's pretty evident. I think the work that's been shown is just brilliant. I've never met you before. I created a database of every student hall in the country. I'm very boring, if you hadn't worked that out. I did it. I started my own and typed them all in. There were 1,800 of them. The average rent was £73. The average the point that you're making, people say some strange things about the rental growth. If you're getting more services, you'll pay more. So when I was a student, you were lucky to have a sink in the corner of a room, and now a student room is clearly very, very different to that. The level of function and service of these buildings, what I'm saying is that the like-for-like rental growth might not be quite so strong as you might think, so you need to deflate it for the offer that's been provided. Will the rental growth continue to go? Probably. It's not got enough supply. Are the regions better? Probably not. The supply into the UK regions was always looking like it was going to be much, much heavier, and that has happened. It's also worth reflecting that those markets also have much, much cheaper housing stock. So the strategy to the UK was always to be in markets where the housing stock was more expensive, because there isn't a private sector alternative. So that's going to matter in Germany as well.
I agree. Based on statistics, the regions are more saturated and reaching the cap faster. So any new building makes a big difference, whereas in London, risk is smaller, demand is stronger. So I don't see this as a threat.
Can it really be scaled? Because whoever's day it was, graduates lived in shared houses with their friends. What's changed? Is that Is that a change? Who's it being targeted at, I suppose?
There are various aspects to be taken into consideration when you look into continental Europe. Let's start with Germany first. In Germany, you have a very decent, long-lasting resi rental market, which has a strong family focus. So some 90% of the rental stock in Germany has a layout for families. Seeing the changing population demographics you have in all the economically relevant cities in Germany, currently a situation that you are between 60 and 70% single household persons. In parallel, rents have been rising double digit over the last 3-4 years. So we come now to a situation that younger people are looking for smaller, affordable accommodation, regardless whether they're students, young professionals, commuters, or whatever in their life situation drives them into a city where they need to find accommodation. And on the other hand, the supply is average size 80, 90 square meter, which makes a huge difference whether you multiply with €8 rent per square meter or 18 or 28. And this brings most of the relevant residential markets in Germany in a massive imbalance. And besides the figures that Samuel has shown on what is the gap to come to, let's say, a average provision rates in German university cities, you have this strong driving factor coming from this side that younger people need affordable, design-oriented, modern accommodation. If you look into other cities, for example, we're in Budapest, we're in Prague, we're active in Poland. You have in those cities a lot of swarm city effects. It's young people, it's students, it's the so-called digital nomads, it's entrepreneurs. This is a very strong growing population of young, mobile, modern people who face housing stock which primarily has socialist roots. So you don't meet today's requirement as regards quality, size, amenities, and rents. And again, you have coming from a completely different angle, a complete imbalance between demand and offer. If you go to Spain or Italy, where you have traditionally extremely high owner occupancy rates, so there is no rental market existing. The driver is different. It comes from the non-existing of rental stock, the same as over here in the UK or in London. So if you look at the European landscape, there are a lot of factors who all lead to the same situation, that demand and supply are imbalanced, and that provides a lot of opportunities, not only limited to the student sector, because the product type, meaning the architectural structures, the layouts, the amenities, the ways these buildings need to be operated, do not differ extremely. So there's a high similarity between a product for a student and a product for a young professional, or a product which you would call a PRS product, and which makes me feel that all these name tag games that we have seen in the past, student accommodation, co-living, micro-living, PRS, and so on, will all merge over the next years into products that are able to serve the requirements of mobile people who want to be in an urban environment, who are looking for a, let's say, basic set of amenities and features that these schemes need to bring along. And there is a more or less unlimited growth perspective for these types of products all over Europe.
With regards to where the tenants, especially the students, are coming from that live, at least from our perspective, in modern student apartments, these are not necessarily the people who just decided to move out at moms and pops and go to college and rent the first apartment in a student dorm. In most cases, the people that move into our products come from a bit far away than the local towns around the university. and they don't really know their way around in the town that they are going to. This is especially true for international students. All the people from Asia, they're not really accustomed to how to sign a lease in Germany. And to give you a short insight on German rental law, you still really need to sign it on paper at least once. So the process that may be different in other countries still is quite old-fashioned in Germany. So what the modern products offer is a very standardized way of finding a new dwelling and moving in without too many conflicts on the way. So it all breaks down to, as Andrew said, operational excellence. You really need to be able to have a product that is as hassle-free for the students that want to live there. So these people then can move in quite fast, and then they realize, oh, I'm not only the move-in process and the signing of the lease was very easy, but the product itself is also great, so I'm not moving out. What we are seeing is the students that stay with us and may have decided in the beginning only to rent for 1 year, extend and say, okay, I like it, I like the community, I like what you're offering, so I'm staying another year, I'm staying another 3 months, 6 months, whatever they can think for their current status of planning. Because as Rainer also said, the people are just very mobile right now, and if you offer a product where these mobile young people are able to move in and move out without having all these troubles I just mentioned, I think that's going to be a very, very important feature in the future.
And yeah, go ahead. One thing, maybe just from the insights that you're getting, is there a sense in which that because student housing itself has improved in terms of standard, that then graduates, when they do graduate, are looking for something better? Whereas when I graduated, I was just hoping where I went to the toilet didn't freeze during the winter. You know, that was a plus. So has that created a cycle of demand really for these kind of micro-living, co-living sort of areas?
Before I would respond to that question, probably in the context what Christian and Rainer said, also Andrew, it's 4 little comments. First, that it is proven now by dozens of projects that students and young pros or graduates can live together and want to live together. And we have not noticed any conflict of interest or some problems anywhere. Second thing, both target audiences have the same motivation to move in, and it's all in one bill and community. So also the motivation, the marketing is similar, and the synergy is more likely. Then another comment is that we see the sample to say that it's for sure it's too small, but we see certain pattern that the more eastern we go, the more likely it is to find hybrid model, because there are not only many the ratio of the young international students, but also young professionals. So cities like Prague or Budapest or Warsaw, there are really like many expats, many companies open service centers, for example, in these cities. They have a lot of Italians or Spaniards coming for 6 months or 12 months to the city, and they are all potential occupants of or tenants of micro-living. So this together creates really a strong potential for micro-living, and the demographic is really strong. Not to say that now it's a bit statistics that the current generation is getting married 5.1 years later than their parents, and they get mortgage 5.2 years later than their parents. So in one generation, we created, or it was created a 5 years more gap for a mobility or flexibility that this generation is using in full. So we're talking about generation rent, and that's a potential for micro living.
Okay, good. And Andrew, from your point of view, within your sort of global remit, how do you see the comparison between Europe and also Asia and the US? We saw there from the slide from Samuel at the beginning that there are specific differences between the US and European model. Are there any perspectives from a global kind of view that would make sense here?
We are, with Jones Lang LaSalle, we are just conducting a survey to exactly that point. Which is very willing, if anyone wants to participate, it's been run by Jones Lang in participation with us. We launched at MIPIM, so the survey is live as of this week. The reason we're doing that work from our perspective is because it is very, very clear, and I have to concede that I have learnt absolutely tons, specifically from our German colleagues. So the German market is developed in a much, much more advanced way than the UK. In many instances, I think the student hall market in the UK was more advanced, and it's obviously now catching up. And I think that the idea that we can operate residential across borders is very, very straightforward. The idea that you get the exact design right in a specific market, you require experts. And so, just taking that back one stage, if we were in the US and thinking about US state plans, so US pension funds, their typical allocation towards residential of some form or other would probably be 20 to 25%. The typical British pension fund would be somewhere between 0 and 5. Australian probably 0, may have done some student halls now. Koreans probably 0, Japanese a little bit. It's enormously different, and that's why we're doing the survey to prove a point of the vast differences here, where some countries just clearly have not engaged because they're perhaps more like the UK was, that the rental market is of a buy-to-let or a private nature. That's what Australia looks like. That's what Korea looks like. That's not what the US looks like. And so that whole idea of this sort of modern, well-established, well-run operational platforms is coming through really, really fast. That's why we've been so heavily focused on this sector for the last 10 years or so. It is without doubt coming, and you'll see that changing. The obvious challenges are, there's regulatory issues in every country. There's mortgage laws in Australia. There's tax treatments. There's, you name it. There's political changes and so on. So it does require local expertise, which is why we partner with specialists.
Okay, good. Thank you, Charles, for your question, and you've got enough likes to get you right to the top, so I've noticed you. Which is, so this is about Portugal, interestingly, and anybody can pick this up. I don't know, Andy, if you've been doing things on this, but Samuel, it was interesting in your slide that the key cities in Portugal were there as undersupplied. But it's right that there's been an increase in international students, and because there's that lack of supply in key cities, are there more opportunities there? Do you think, what's your view on that market in comparison to some of the other European markets?
Well, the Portuguese cities are undersupplied, but with a very affordable product. So with the 550 plus per month, it's quite well supplied now when you consider all the pipeline. So we have done a lot of research also on not only on the demand supply, but student preferences, and talking to the cities and governments that send students to, or the territory, governments from territories that send students to these cities. And it seems like there is a lot of undersupply in a territory of 300 to 550. But when it comes to 550 plus, then already some of the premises experience difficulties with occupancies.
Okay, good.
Maybe one comment here in addition. What you see in a lot of these countries, regardless whether it's Portugal, to a certain extent Spain, but also in CEE, these countries have suffered a lot in the last years economically. They are recovering now at different speed, but in addition, a lot of these, not countries, but cities in these countries are flooded with international students, mainly driven by Erasmus programs. So if you go, for example, to Lisbon, over the last 2 or 3 years, Samuel, you know better, but gut feeling in the city is there are thousands which have come over the last 24 months, and they have completely hit the existing system, which is a government-run dorm product where you see 20 bunk beds in one hall with 5 sinks on the wall for 200 euros a month. Yeah? And this is not what you're looking for when you're coming from Stockholm or from Paris to Lisbon. Yeah, so there are massive opportunities in these markets, but these markets, immature markets, also show a lot of obstacles when it comes to building regulations and rent regulations. So specifically, Portugal is really a tricky thing. In most of the other countries we're in, for example, in CEE, you only have one route which really works, which is a hotel regime. And if you put the hotel wrapper around your building, you can accommodate during the academic part of the year, but also through summer, which is an issue in most of these countries. For example, in Portugal, the academic year is 9 months. If your license doesn't allow to, you can shut down through summer. And in Spain, it's 10 months. And here you also have to see, in Barcelona, you have issues coming from the planning regime. On the Mediterranean strip, where you have a beach in front, summer occupancy is less of an issue than if you go to Oviedo or Salamanca, or even in Madrid, where the number of summer courses grows at a slower path than the number of beds. And the same applies to CEE countries, where you need to bring a model in place which allows you to generate revenues in 12 months of the year, not only in 9 or 10 or however the academic year looks like. And this is the challenge for someone who operates or develops on a pan-European basis, because we are one structural body as the EU, but we're far away from seeing harmonization in the relevant aspects of building schemes, operating schemes, and renting these out to different populations with different terms.
Okay, good. There were some questions coming in on rent as well, so I'll just pick up on that, which is, so let's say you're looking at a yield. How much of that is based on rent, and how much is there? How much capex do you need to put into either student housing or into micro living? So, what's the relationship there between capex that you have to do and the rent?
It's a good question, which you can't answer generally. It's pretty much depending on, are you in a country or a jurisdiction where you face high wages or low wages, whether your scheme is 600 plus beds or 150, but I think as a ballpark figure, your leakage between GRI and NOI is in a range between 12 and 20% on such products. Do you agree?
So I think that point is incredibly important. So if you're running, so what we just heard is that if you're running a high quality, modern, fit for purpose student building, you're losing 12 to 20% maybe. If you look at the MSCI data in the UK for what's within the benchmark of students, you're probably expected to lose about a third, because it's such a disparate body of product that is within that. That's the point I was making. That's why issues about controlling rents and not obsessing about rental growth in the short term, which is a very British mentality, and actually taking operational efficiency, which is a German mentality, and sort of swapping them over. What we'll find is there's more growth in Germany and more operational efficiency to gain in the UK. And it's that nuance that creates an enormous opportunity in this market, because it's not widely understood that there's gains as we start to think cross-border about what's best in class behaviour. It's very, very obvious to us. I have learned tons from our German colleagues about operational efficiency.
Okay, good. Christian, did you want to pick up?
Yeah, as I understand, the question was also about capex and not only opex. So
yeah, as well. Yeah.
If if I imagine a new build PBSA scheme in Germany, for example, all institutional grade developers at least try to provide furniture and communal areas that are really built to last. So we're not putting any kind of IKEA furniture or things like that into it. But we're trying to really find suppliers that make the furniture as sturdy as possible so that we are able to minimize the replacement costs and everything that comes with it. And also in terms of really remodeling, we're not seeing the need to continuously invest and change the communal areas every year, because when you found a model that works, you may need some paint and you may need to change the floor every once in a while, but that's not really the major issues. It's more about, as Rainer said, the spread GRI to NOI is about what you really need to cover your running costs for the amenities. If you offer Wi-Fi, it should be included. If you offer gym and other facilities, these are like small running costs, but they add up so that you end up at these 12 to 20% spreads.
Okay, good. Unlike Jeremy Corbyn, I am going to accede to the requests of everybody here in conference today and pick up the Brexit question. So lots of questions actually been coming in around that topic, particularly what might happen. You know, does anybody see any influence from EU funding being removed in terms of the UK? Will the UK be less attractive for international students? And also the flip side of that, does that mean for Germany or for continental Europe that actually there'll also be a boost in terms of attracting international Chinese, Indian students, American students? So anybody can pick that up from their perspective.
The lone British guy on the... well, clearly I understand Brexit inside out, and I've got all the answers. So specifically to the student market, it's pretty hard to see. Well, so two things will happen. If there's some sort of difficult Brexit, then the high likelihood is that currency will bounce around, and we are seeing that there is a currency advantage for non-European students to come to the UK. So you've seen that with Chinese and Indian, so on, Nigerians. It's very likely that that would continue. Of course, the Brexit vote and issue has got embedded within it migration-related issues. And so does that change something? One of the comments that you'd made right at the outset in your introductory remarks is that one of the reasons that students study in particular places is to think about, will they end up settling down? And I think the UK is has been so successful for many years, or London in particular, because it's attraction to international students who have then stayed and worked and made the economy dynamic in the way that it is. So if that is potentially being closed off a bit, then that might just hold people back. I actually don't think Brexit is the biggest issue for the student hall market. I think there's other things about the way that people actually study that would be a bigger challenge. So you asked, does Europe benefit?
Yeah.
So really interesting about English language courses. So international students often want to study in English. That's to my advantage because I don't speak any other language. They want to study in English, and they typically want an experience when they're doing that. They don't want to go to the University of Basket Weaving off a motorway that no one's heard of. They want to be in high-quality universities in great locations and have that experience and cultural association. It's likely to mean that the UK benefits still more perhaps than other markets. The Dutch market has certainly got lots of English programs, but they're relatively small in the scheme of things.
Okay, good. Do you see marginal benefit in terms of the areas that you're working in, Rainer and Christian?
Well, I think the overall international traffic had already changed besides any Brexit implications. Yeah, so I'm in that sector now for 10 years in Germany. The figure has grown from close to 100,000 internationals to 350 currently. According to research, within the next 5 years, we will have more international students in Germany than in the UK. And this also does not factor in any Brexit effects. And there are characteristics driving that. The English taught courses is one. The affordability question is one. The, let's say, lifestyle, pleasure, habitality aspect, which is not a German factor, but if you look at Lisbon or you look into Budapest, yeah, there are hubs in Europe who are highly attractive for young people. And this is not, let's say, bringing the UK position to an end or significantly weakening this, but slowly but surely there are repositioning aspects. And last but not least, I think there are also effects coming from the uncertainty aspects out of a Brexit, meaning how about visa policy? How long can I stay? Will my education be accepted in all other countries and so on? Yeah, a topic which you currently already have in secondary schools, which is a nightmare in Europe. Yeah. On higher education, it has been addressed through the Bologna process, but for the UK to be seen, yeah, how they will, let's say, be still part of the Bologna systematic and make sure that at least for the European community that attends university here in the UK, there's no downside going along with the fact that, and that's one of the final things, the cost attached to higher education as the combination of tuition, accommodation, and cost of living is way higher here than in other attractive cities on the European continent.
What's the situation there with CE markets? Is that more of an opportunity? Do you think that they're further behind in the cycle, but that will change?
Everything says it is so, as you say, that like Ireland 8 years ago, to build an apartment was 30,000. Now it's transacted for 130,000. So it was an early market. Whoever took the risk and was brave enough and took the control risk could have good returns. So yes, Poland, Czech Republic, Hungary are markets that still are heavily undersupplied, have the highest percentage increase of international students. Yes, many of those students are so-called intra-regional, so there are not long-haul inter-regional Chinese, Indian students, but some, especially Arabic students. We have seen that even though it costs roughly probably 60,000 to build a unit in Central Europe, the transaction prices are already higher, and they are able to charge, like in Budapest, 473 and more euros. So whereas it is built in Vienna 120,000, but you charge 600, 650. In Budapest, you start building costs lower, but you charge only 15-20% less than Western Europe. So I think, in simple, Central and Eastern Europe is in a sweet spot that non-UK Western Europe was probably 7 years ago, and now probably 5 to 7 years from now it can be in a very good exit period.
In terms of the cities that you're looking at, both for micro-living and for student accommodation, are there any particular key things that you're looking for, whether it's infrastructure, a higher quality of the university, and are you also looking for micro-living in terms of university cities? I suppose, what are the key things that you're looking for when you're looking to develop or invest?
I think it's always important to have, as you said, the quality of the university. We struggle a bit, not only us, but also the investors we are working with smaller college towns that are reliable only on one, potentially also private university, where we have seen situations in Germany in recent years where well-known private universities failed or almost failed, and that is if you are investing in student accommodation near such a campus, it's a disaster. So you really need to make sure that you are not relying only on one big faculty or one major course, but that you're able to fill your rooms with visitors and with students that attend also other colleges, universities, language schools. So it's quite important not to be too small and look for small, very good deals. Better go for bigger cities and then potentially also accept lower yields, but have the certainty that the entire system is going to survive the next 20 years.
Okay, good.
And in addition to that, the level of imbalance of the rental market as described earlier. So what's the offer, what's the demand, what is the development of the population in the city by age segments, so how many young people are in the city, are coming to the city, which also translates into the prosperity of such area. And in addition to that, for sure, we also look, is there a potential spillover from a decent to high quality university system where people stay after they have finished their higher education, and for sure also from an investor's perspective, the liquidity of the market. So especially in CE, if you leave Poland aside, but all smaller countries, for example, Hungary, and also Czech Republic, there's only Prague and Budapest, and there are secondary cities you might have never heard before of. And that is an issue in those countries, and makes it easier than in countries like Spain. Same applies also to Portugal, where Coimbra is, or Braga, way more difficult to sell to a New York, Rio, Tokyo investor than the pure attractiveness of the city fundamentally might be.
Okay, good. Yes, Andy. Yep.
Sorry, just a couple of sort of headline rules that sort of sit in my head rather than perhaps all my colleagues. One of those, depending on the nature of the investor, I would say don't fear the second tier. So it's cheesy line number one, because what tends to happen is that the income return tends to be higher and the volume of international capital tends to be lower. So if you're genuinely in this for the long term because you believe the story, then why are you worrying about liquidity? So just bear in mind that income return is about 3/4 of total return. Then just take income return and keep going. Clearly, you need to think about liquidity if that's an open-ended fund or whatever it might be. The second point is about what sort of product should you look for. Second cheesy line is we look at AAA locations. So thinking like bond, this is meant to sort of signal like bond type idea. And the 3 A's would be accessibility, affordability, and amenity. Accessibility, it's got to be in the right place. Being in a windy field in a small village, it's not going to work, right? So accessibility clearly matters, and that's it's just to set that idea of multiple sources of occupiers, basically. Amenity, we think it's obvious. You want the level of cultural amenity, whether it's bars or restaurants, shops, whatever it might be. In the case of PRS, schools and social facilities. So amenity, we want it there. We don't want to be waiting for it to be created. That's a sort of a gamble on the place, really. And then affordability means different things in different sectors. But if you think about PRS, broadly about 1/3 of the household disposable income to rent, sort of not a bad sort of cut-off point to start. In lots of London, it's over 50%. So you've got to wonder, how that works. But of course, there's nowhere else to live. So if you want to live in London, you've got to pay rent. We'd much rather be at a more value-type proposition. We need to work out, if we're investing in the student market, the premium end, whether these people are genuinely there. So you need a very big community of high quality, affluent postgrads studying at great universities. So accessibility, affordability, amenity, the 3 A's, the triple A's.
Okay. Samuel, just very quickly, in the US, obviously, there's a huge amount of listed companies in this space. You mentioned the likelihood of consolidation, given the desire to have more pan-European portfolios. Does that mean that we'll see more listed entities coming into this space? And do you see it moving in that direction? Will listed companies have more of an advantage? What's your sense of it?
Rightly so, yeah. The benefit of this asset class is that it's quite predictable over like US, UK, Western Europe, Eastern Europe, and the patterns repeat and therefore can be predicted. So we can expect the consolidation this direction and pace. Yeah.
Very last question, 20 seconds each. Where to invest? It does look looks more like Captain Hook, really, rather than a question mark, now that I see it. But anyway, so Samuel, based on all the research, where should these good people be investing?
I like the phrase, how did you say it, Andrew? Don't fear second tier. It was a good line. I think that these opportunities with a reasonable risk offer the highest returns, and now I think I've heard either Rainer or Christian to say at some of the panels, probably at MIPIM, that basically in international education, the tier 1 cities are different from the tier 1 cities by population. So Heidelberg or Aachen might be a tier 1 city. So tier 2 cities in terms of population, but the college cities in terms of tier 1 are probably the hotspots that I would be looking at. If I don't have to distribute billions, because it's not possible in these small locations.
Okay, great. Christian.
Yeah, I think it really depends on what you're looking for. As Samuel just said, if you need to invest big tickets, you can't go into small cities and try to find a 100 million deal somewhere in Aachen or so. So it always really is a tailor-made strategy for the investors, and in the end, the German market, be it tier 1 or tier 2 cities, should work very well in the next years. So I would welcome everybody interested to invest in Germany.
Rainer?
I totally agree. But in addition to that, unless you are the big ticket investor, I would advise you be ahead of the curve, take more risks, bring your equity into the more immature markets, because if you look at the fundamentals of these markets for the next 5 years, even if economy slows down, they will see further booming aspects, and there are in Europe a lot of those spots, as described by Samuel, where if you are very selective and you are prepared to be hands-on on the ground as an investor, can make decent profits over the next 5 years.
Andrew?
So I need to say something different. So, I mean, we like Germany a lot, and we've done lots there. So that's a sort of given. I think to try and think about strategy, so I wouldn't be particularly driven by the macroeconomic thing. The point I was making earlier about the work we did with how to invest in winning cities, that's the observation that all the cities are growing really fast in Europe. There aren't very many that aren't. They're really identifiable. And so they all have a enormous residential shortage. So then the trick must be to think about how you invest in that shortage. If you go for the most obvious primary sort of first tier cities, then it's more likely that the standing stock is going to be more expensive. Now that's sort of fine for certain investors. It would sort of suggest that you might just want to move slightly away from them if you have the patience or the patient capital and get involved in the creation of the product in some form or other, which is sort of what these guys are doing, right? So to get into that and then to create the product. So people say it's risky, but that's not like building a shopping centre today, where you can't really be clear as to what's going to happen next. I can be very, very clear with you that if you build the right sort of residential product, you will fill it. You would have no hesitation about that comment. So it suggests that leading cities, some sort of forward commitment, take a slight edge off the buying the prime stuff that's already established. You can do that, and in the better cities.
Okay, great. Thank you. all that's left to say really is if you've got any question for the speakers, they will be there. But if you could join me in thanking yourselves for such super questions and also our speakers.